taxes on every corner we turn. So anyway, I'm done. Okay.
Understanding Social Security is almost as hard as it is to understand John's little rants.
Yeah.
So
I'm for the people. Let's just say
For the people.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt Walters here with John Martfeld.
Morning.
Lee Mackey.
Good morning.
Today we're going to talk about some super exciting stuff like Social Security. No, we've got some good topics today. Social Security, IRS contribution limits and changes that are going into effect in 2025. Some tax conversations, planning ideas, and things that need to be on your radar moving forward. So as always, we appreciate you guys listening. Give us a like, subscribe, comment, and we will try to take a look at those. We always appreciate it. So jumping into today's talk, Social Security. John, I know you said you had some interesting stats, and this is a hot topic because it affects everybody, right?
Yeah, it's such a boring topic, but there's a lot of folks out there that feel like it might run out, right? We might run out of it. Some people younger especially worry they're not going to have it when they get older. Of course, a lot of younger people don't even think about it. And a lot of our clients in their 70s are worried it's going to run out in their lifetime. So did some research on it. But here's the thing about, just give you a little tiny backstory history of Social Security. It was started back in basically after the Great Depression as a way for the government to take in money and give out just a few years after somebody retired. Basically, It was not meant to last for 30, 35 years as it is today, because we're living so much longer than when they put this in place. And Congress, obviously, as they always do, failed to put in place like where it would gradually increase age limitations.
They failed to plan.
They failed to plan big time. So it was not supposed to be where it was more of a way to make money for the government to pay out all their social things that they kind of started under FDR than it was an actual benefit we were going to count on in retirement. So you have to think of it like that. So now we fast forward to today, people are living much longer. We have more people taking Social Security than we're adding to it. So yes, there's a time frame, and you can look online and you can find different stories. Some say 2041, some say 2035, but somewhere in between there, at the rate we're going to run out of Social Security according to the data, right? Mm-hmm. Well, here's a couple things on that to make you feel good. There's simple solutions to fix it. So Congress will fix it because the Congress that allows it to run out and not pay people is the Congress that will not get reelected, right?
Pretty fair.
And all they care about is getting reelected. So there are simple solutions like, for example, raising the retirement age, which has been done, but not enough going back to the 1930s. It should be higher today if you want to use the same, forecast way they did it back in fact, if we kept it going by average age, we wouldn't start Social Security benefits till our late 70s.
Yeah.
It would be the same equivalent of when it started back when they started it. So if you think of it like that, we're way behind on that. So they could raise the age limit. They could increase the Social Security payroll tax, which is always an idea these morons come up with. They could trim benefits, but there are other things they could do, as in
privatize it.
Yeah, privatize it would be fantastic, but they could cut other things and refund this. So there's many, many ways to fix it, and they're going to fix it. So I guess my first thing to say is the concern that it's going to run out in 2035 or 2041 or whatever age you hear or year you hear. It's not going to happen. I'm confident that it's going to be fixed.
It's going to be there. It might feel a little different in terms of but the idea it's just going to go from where it is at to like zero or drastically cut is very,
if they reduce, just to give an example, if they reduced it to 83% of benefits for everybody right now for the rest of time, it has basically an infinite time frame of not running out. So that is like the worst solution, right? Everybody gets a 17% cut today. It would run for next 100 years forever. And that's not going to happen, but that's...
something that gets brought up, it seems like every few years, but the last time I think that it was really thought about was during younger Bush's administration, was the idea of privatizing it. I feel like that would be a nice solution. I think that
100%.
they're not going to let it fail.
So
I think
explain what that means.
you would essentially give U.S. citizens the ability to invest
So it'd
some
become
of their.
more it'd be like
A
have some,
401k.
like 401k. feel
That's
to
correct.
it.
Right
Now-
now, it's invested entirely in U.S. Treasury securities.
That's correct.
Entirely.
And so I don't see them. I don't see them saying, "Here, Joe Smith, invest your Social Security benefits." I could see a portion of it. That they're going to keep
Our
half
portion.
of it. Correct.
Like say we put in 7.5%, company puts in another 7.5%. That's FICA, right?
Mm-hmm.
So maybe the company's piece goes to the Treasury securities as always, and then your piece could be
Invested.
how you want it.
Have
And,
some
and
more
so
options.
I just think that you've always heard, the government doesn't trust the consumer or the average
Right,
citizen,
right.
but the long term, tenure of the market has been much higher than the long term average of treasuries.
Talk about something
Right.
bullish for stocks, and all of a sudden you can
Oh
start
man,
investing Social Security funds.
So
and-
it'll be
awesome.
I mean, heck, put it in a target date fund.
No doubt.
Don't even let anybody do it. Just put it
Exactly.
in a target
Well,
date fund.
government, when you work for the government, you're in their little plans.
Thrift plan.
Yeah. And you could do it in those. I mean, do it in the thrift savings plan, stuff that they use for that their employees can pick
Bottom
from.
line,
Yeah.
it's going to be here. It may look and smell a little bit different, but it's going to be around.
Yeah. So with around Social Security, kind of taking this on to the tax side of things, a lot a term or phrase that a lot of people are not familiar with related to Social Security is provisional income, right? And provisional income brackets and how to calculate, is Social Security going to be taxable or not? So we're not going to dig into this too much, but I think it's something worth mentioning, regardless of what Social Security looks like. The current structure for how it is taxed is based on your provisional income bracket, okay, and your provisional income. So when you calculate provisional income, this is separate. This is federal government program. They make it as complicated as freaking possible.
Right.
And so this is completely separate than your just standard income tax calculations. And how do you calculate? To calculate your provisional income, which is then used to figure out how much of your Social Security benefits are subject to taxation, you take half of your Social Security and all other income, figure out what that is, okay? And for an individual whose provisional income is $25,000 or less, 0% of Social Security is going to be subject to tax. So your Social Security is going to be tax-free, right? For joint filers, that threshold is $32,000. Okay, if you're a joint filer and your provisional income, half of Social Security and all other income is between 32 and 44, then up to 50% of Social Security is subject to tax. And if you're a joint filer and your income is above 44,000, your provisional income, then up to 85% of your Social Security is taxed. So currently, up to 85% of your Social Security can be subject to taxation if your provisional income is above 44,000. So that was a lot of words that may not have made a lick of sense. But the long and short of it is, if you're wondering about Social Security and you're researching and you're thinking like, what is this going to look like for us in the future? Taking into account and calculating how much of this is going to be subject to taxation in retirement is
Well, and a lot of times clients, they hear what they want to hear, as we all do at times. But they'll come into the office and say, well, I heard that my Social Security is not taxable. Is that correct? Well, the answer is depends.
You have to do a
Yeah.
calculation.
And so you have to do two separate calculations when you're looking at your tax situation with Social Security. You do your provisional income calculation, and let's say you have $2,000 of Social Security benefits, and your joint filing and your provisional income is $100,000. That means $1,700 of the $2,000 Social Security is going to then, this is per month, $1,700 per month is going to go into your actual income tax calculation.
Right.
So there'll be $300 of it that doesn't get accounted for.
So here's what I have
This
to
is
say
why I'm
about
a
that.
fan of the index card
Yeah,
tax
this-
filing option.
This is also why I'm a fan of capitalism and not socialism, because this just drives me insane. Like we tax everything. We talked about this long ago about how everything is taxed. We earn it. It gets taxed.
Yeah.
Everything is taxed, right? And this is just another like little thing, and you know what? Most of it is because our drunk sailors in Washington D.C. don't know how to manage a budget. So they find ways to take money from us. So all your life, you work your tail off. You pay into FICA. 7.5% of your pay goes into FICA. Your company matches at 7.5%. So we're putting 15% into this fund so that when we retire, we can draw pennies out of what we put in there because it doesn't make as much on the way they invest it. And then we get taxed on it again. It just drives me insane.
Yeah.
But now I go off the rails. So I have to get myself calm down. 1, 2, 3, 1, 2, 3. It's all okay. But this stuff just wears me out.
Yeah.
The fact that it's so hard to understand and hard to calculate. And then the fact that they tax us on every corner we turn. So anyway,
Yeah.
I'm done. Okay.
Understanding Social Security is almost as hard as it is to understand John's little rants. that he
Yeah,
goes on.
yeah,
So,
yeah.
I'm for the people. Let's just say
For the people.
election season is over, John.
I
You
know.
don't have to-
I'm sorry.
Okay, so Social Security, feel good about it moving
Yeah.
forward. There will be changes, but hopefully those are pretty modest, subtle changes. Provisional income. All right, IRS contribution limits for 2025. So we've got some things that have changed going into next year, right? So Roth IRA, traditional IRA contribution limits. So from 24 to 25, they stayed the same. So you can put $7,000 in. If you're over the age of 50, you can throw in an extra $1,000. So if you're over 50, you can put an extra $8,000 a year in.
No, you can put in 8,000. You said an extra.
Sorry, you can put in 8,000.
Yeah.
401ks went up to 23,500. They were at 23,000 for 2024. The catch-up contribution for 50 plus is 7,500. So if you're 51 years old and you're contributing to 401k, you could put in 31,000 of your own dollars into your 401k in 2025.
If you have a Roth option in the 401k, the income limits they don't pertain. So if you make 300,000, you have income limits on how much.
Yeah, you're getting ahead of me. I was about to cover.
Oh yeah,
that.
I'm sorry.
So,
Go.
no,
Go.
you're
Go.
good.
Go.
You're good. So the simple IRA increased from 16,000 to 16,500. So
Yeah.
just be aware of that. Those are things to know that as you're planning, if you're not set to like max it out already, go in there and make some adjustments to make sure that you're contributing that extra $500 to the 401k or the simple, and that you're utilizing the catch-up provision contribution if you are able to. So to John's point, the income thresholds for contributing to a Roth IRA. So we've been big proponents of Roth IRAs, Roth conversions. We've talked about it some on the podcast. We've been doing a lot of that planning with our clients with the idea that taxes are unfortunately going to need to go up in the future. Just the chances of them not being higher in the future, we feel like
Maybe not the next couple
very
years,
low.
but
Yeah,
eventually.
longer term.
Yeah.
So yeah, with the Trump, victory,
We feel good
with the
about
Trump
it
win,
for
we've got
short
some
term.
more bigger window for planning. But you can't go in and just contribute to a Roth IRA regardless of your income limit, right? I think a lot of people know that. That threshold over the last few years has gone up a lot.
Yeah.
So it just a few years ago, it was in the like 190s. It was like 194. And if you made more than 194,000, 196, something like that, you couldn't contribute to a Roth IRA, or it started to be phased out. Now that threshold for married filing joint is 236,000.
Yeah.
So you can make all the way up to 236,000 and contribute the max amount to a Roth IRA. Now there's a phase out window. So from 236 to 246, you can still contribute, but you just can't contribute the max. After 246,000, you can't contribute anything to a Roth. So something to be aware of. If you're around that threshold, my recommendation is to wait till the end of the year if you don't know where your income is
Right.
going to be, because you can contribute to a Roth IRA up until the tax day, April 15th or whatever it is this coming year. And so you can kind of do your taxes and know, okay, we're going to be above or below the threshold, and then make that contribution, because it does get kind of tricky if you make it throughout the year. You figure out you made too much, and then you have to unwind that and go pull that money out of the Roth. Happens quite a bit, but if you can avoid that, that's always a good thing. For individuals, the threshold is 150,000. It starts phasing out, and if you make more than 165, you cannot contribute to the Roth IRA. I'm saying a lot of words, but I'm almost done. But then to John's point, with a Roth 401k, the beautiful thing there is there are no income limits. You can make $2 million a year, and you can contribute to a Roth 401k. just knowing that 99.9999% of the time, your employer contribution is still going to go to the traditional bucket.
Right. And I want to make that point because when we do a lot of planning, there's two things we're talking about today that I get asked a lot in the planning part. I'm going to go back to Social Security real quick. When do I turn on Social Security? So that's a question we get asked a lot, and that's a calculation that we do, and it's easy. We figured it out, right? But the other one is that a lot of people believe they can't contribute to their Roth 401k because they make too much money. They're above the threshold, and then when you let them know that they can, it's awesome, right?
Yeah.
I mean, because you can dump into that up to that 23,500 level. If you're over 50, even more.
Yeah, I mean, if you're over 50 this next year, you could put in $31,000 into a Roth 401k.
Which is awesome.
Which is great. I mean, you could make up some, a lot of progress in a short period of time being able to contribute that much.
Now, I think we touched on this a few weeks ago, but beginning in 25, are you aware that there is a new catch-up contribution for investors between 60 and 63?
Yeah.
They can put in a catch-up contribution of up to $11,250. More.
Above, yeah.
Above, for a total of $34,750.
Okay, 30. Okay,
So if
yeah,
you're between 60 and 63,
Yeah, so it's
beginning
just a little bit
this
more than the
year,
catch-up provision, yeah.
they can put in another almost $4,000.
Got it.
Which is pretty awesome.
Yeah, I mean, this is just, again, to your point, government.
Yeah.
Why didn't they say you could do it at 59? Why didn't
know.
it start last year? But for some reason, this year, between 60 and 63, you can have an even higher catch-up. And we have a lot of clients who are maxing out their 401k contributions that are going to be in that sweet spot of age.
Yep.
And if you're listening, just know that the rules have changed for you in your favor if you're always bumping up on that contribution.
And there are now, I think we mentioned this a couple episodes ago, but there are simple and SEP Roth IRAs. Now, I don't think there's a custodian out there that supports it yet.
Correct.
Because they're so new. Like you can't, we custody at Schwab and LPL for our clients. I don't think either custodian offers that. I don't know. I don't think Fidelity even does yet. So that's still hard, if not impossible to get. But keep that on your radar if you're a small business owner, work somewhere, and have a SEP or a simple. That's an option that you hopefully can provide in the near future. Is that Roth option?
Yeah.
Which is awesome.
Yeah.
Okay. What else?
I mean, we're now 2 weeks removed from the election. The markets are settling down a little bit.
Yeah.
They raced up in the days afterwards. They went back down
Giving
last
back
week.
a little bit, yeah.
And there's so much more to the finance world than what is happening in Washington.
100%, yeah.
A massive deal that we have been talking about for the last 2 years that is now kind of springing its head is the Ukraine-Russia conflict. I mean, I think we're 2 years.
Yeah.
The war's 2 years old now. And really over the last 72 hours is when, over the weekend it broke where Ukraine announced and then the U.S. kind of confirmed that Ukraine will be allowed to fire U.S. long-range missiles into Russia. They are seeing that, Russia is seeing that as an escalation, and the markets just don't like it. Now, if you look at points, it looks like it's a big deal, but today the markets are down
400 right now,
or 0.5%,
Yeah.
if that. And so the markets are kind of, I think, taking it in stride a little bit.
It's still much higher than it was 2 weeks ago before the election.
But I think it bears watching.
Yeah.
Volatility is creeping back in. When you look at the VIX, but the one thing that is interesting is that the 10-year. When there's volatility in the world, the 10-year, people fly to safety.
Yep.
They want something
back
that's
down.
Yes. And so people are buying U.S. Treasuries. 10 years coming back down. But we talked about it a couple of days ago. The 30-year mortgage hit 7% this week, and so the average that will ease back a little bit with the 10-year coming down. But it's funny, Matt. I hear you say this often, that no matter how good things are, bad things are, they tend to revert back to the mean. And we're kind of seeing that. There was some euphoria after the election. That things are kind of getting back to normal now. There's conflicts around the world. But, I mean, we can't ignore.
Yeah.
It will be interesting, the dynamics after January, when Trump gets back into office, the relationship between the U.S. and Russia.
Yeah.
And what happens. On the campaign trail, he's like, well, I'll solve this problem in 24 hours.
Yeah.
We'll see. We still have a lot of time between now and January 20th.
Yeah. Yeah, and I think it's a good reminder. Like when you have days like today, and the last few trading days have been red for the major indexes, and so I think it's a good reminder that hey, are the conservative win on election week, is it good for the markets and business? I think the answer is definitely a yes. But what I've told clients that I've met with over the last week or two is that doesn't mean the market is going up and to the right over the next 4 years.
Correct.
Right?
Yeah.
Is the environment more business friendly? And is the opportunity for the market to move forward and continue to grow possibly better under the president-elect and his administration? Yes. But that doesn't mean it's not a guarantee. You
No.
can't,
It's not a guarantee.
You're going to
and
have
it takes,
volatility.
It takes time.
Yeah. So
Now,
this goes back to what we talked about before the election. Don't try to trade around this stuff, right? Don't try to trade pre-election. Don't try to trade post-election based on short-term kind of gut instincts and feels, because it's impossible.
Couple of things. Putin today changed his policy on when he can use nuclear weapons. I don't know if you guys
Softened
saw that.
it a little bit.
Yeah, softened it a little bit, which is just like a thing.
It's a tit for tat.
Needle the world. I can't fathom that he wants Moscow to be eliminated.
Yeah.
You get my point? Like,
Yeah.
I mean, it's ludicrous to think that this is going to start that. I think people are scared that it could.
Well, I think
and
it's
someday somebody will be crazy enough.
I think it's funny that he thinks they can do whatever they want, and then any response is escalation.
No
It's
doubt. No doubt.
you did just bring North Korea into the conflict.
Yeah.
And you did invade them, and they have the right to defend themselves and come after you. So yeah, it's kind of funny. Same anyway.
But we've looked at this in the past, and we see some volatility this morning. I don't know how we went from simple IRA contribution limits to
just a topic of the day.
You said anything else, and that's it. Yes.
But we're seeing some volatility today.
Hey, one thing on the clients' euphoria of the election, and all of these conversations, and it's about taxes, about Social Security, about questions. One of the nicest things, we are financial planners, right? We bring people in, we do our retirement analyzer, and we help clients out. And there isn't a conversation that I have that doesn't have a conversation about Social Security, taxes, the election, where things are going, how the markets work, corporate profits, and so on. All of the stuff that we talk about on the show comes out in our meetings. But one thing that Matt always says, and I totally agree, it's like emotions kill the investor. It has proven back, however long you want to look back. If you take emotion out of investing, that's why the S&P 500 index always outperforms about 85% of any fund that tries to beat it. Emotion is the worst thing. This election was great, but to the point of it might be 2 years before some of the things that Trump is going to do actually help the companies that create we might have a bull market 2 years from now, and it might be a little struggle between now and then. You have no idea.
Sure.
That's the point. But when we do planning right, and you know what your risk tolerance is, and you stay within those lines, and you're constantly communicating, you win.
Yeah. So I remember my thought. I'll make it real quick. The short-term volatility on this Russia-Ukraine news. A while back we looked at what have markets done during times of geopolitical conflict and war. And actually, most of the time, when you look at just from the beginning of it to the end, the market is like pretty significantly positive.
Yeah.
Right. You're going to have some volatility.
Yeah.
But wars, like, we don't like them, they're not good, but like wars in general does not mean the market's going to do poorly.
Right. And defense stocks might be something you lean on.
Sure. Yeah, that was not a recommendation.
That was absolutely not a recommendation.
All right. Well, we appreciate you guys listening. Any party thoughts or words?
No, next week's Thanksgiving.
Thanksgiving.
Yeah.
So if you're listening to this week, some people will be hitting the roads next weekend.
Yeah. You can go catch up on all the Market Moment podcast.
Absolutely. Great way to spend your Thanksgiving holiday.
That's right.
Yes.
All right. Well, as always, we appreciate you guys watching and listening. Give us a like, subscribe, and we will see you next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. Mach 1 may only transact business in those states in which the firm maintains a notice filing or has qualified for an exemption or exclusion from registration. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com. Thank you for listening to the Market Moment Podcast.